I think conventional corporate finance treats capital as it's toxic. Like it's capital is toxic to the corporation, and I think capital is virtuous, right? What rich family would give away all their money, right? But every rich company does, right? Apple does, Microsoft does, Nvidia does, Meta does. They all brag about the doing of it. They all brag about their buybacks. They all brag about their dividends. It's like they're literally getting rid of their capital as fast as they can. And you know, why would all these people that you're invested in that you think are so smart, if they're so smart, why are they desperate to get rid of the money?
Imagine a world where the wealthiest corporations, Apple, Microsoft, and Nvidia, aren't actually growing their capital but burning it away. Sounds crazy, right? But that's exactly what Michael Saylor revealed in a jaw-dropping interview at the ICR conference. He shattered the illusion of traditional corporate finance, questioning why the biggest companies are obsessed with stock buybacks and dividends, essentially throwing money out the window. Meanwhile, the ultra-wealthy hoard their wealth, ensuring their financial empires remain unshaken. According to Saylor, corporations act like capital is toxic because the system they operate in is broken. With bonds offering negative real yields, companies are engaging in financial suicide, desperately shedding cash in a race against time. This system creates a ticking time bomb for businesses that aren't adapting to the shifting financial landscape. But there's a game changer, Bitcoin. Unlike traditional assets that decay, Bitcoin preserves and multiplies capital, offering a lifeline for businesses ready to break free from the system. Wall Street doesn't want you to know this, because if corporations and individuals wake up, the entire financial power structure could collapse overnight. Let's dive into clips from Michael Saylor's interview for deeper insight.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
I kind of feel like there's a certain natural selection to this. If you like money, if you need the money, if you're willing to take risk and you're willing to bleed to get the money, then Bitcoin will give you the money, right? But those are the people that deserve it. If you're just rich and arrogant and you only take risk-free investments and you just expect to stay rich, then, you really want to help them? Do they need help, right? I mean, I don't think so. So I think the volatility is a feature that's a benefit to an investor. It's a benefit to a corporation. It's a natural characteristic of a life form. It's alive. It's vital. It's volatile. I think that there are two big ideas in corporate finance that are traditional, Morgan. One, volatility is a bug, and I think no, volatility is a feature. And two, and I'm going to say this in a hyperbolic way, but to make the point, I think conventional corporate finance treats capital as it's toxic. Like it's capital is toxic to the corporation, and I think capital is virtuous, right? What rich family would give away all their money, right? But every rich company does, right? Apple does, Microsoft does, Nvidia does, Meta does. They all brag about the doing of it. They all brag about their buybacks. They all brag about their dividends. It's like they're literally getting rid of their capital as fast as they can. And you know, why would all these people that you're invested in that you think are so smart, if they're so smart, why are they desperate to get rid of the money? And the answer is the capital asset they use is toxic to them. If I give you $1 billion and you invest it in bonds that have a negative real yield of minus 10%, then you're destroying $100 million a year. So if they're smart and they know that, they know they have to get rid of the capital. They have to flush it out of the system as fast as possible. And I think that there's a new idea. The new idea is adopt a different capital asset called Bitcoin, and you get to keep the money. And now capital is not toxic. Now capital is life-affirming. Now instead of blowing away $100 billion of capital, now you could keep the $100 billion of capital and it grows 30, 40% a year, and pretty soon you've got $500 billion of capital and your shareholders get rich. That's the big idea. Bitcoin is on a need-to-know basis. If you don't need to know, then you won't ever figure it out. So Microsoft is arguably, right, Microsoft is one of the 7 greatest companies in the world. Maybe it's the greatest company in the world, but some people might think it's the first or the second or the third. So if you run the greatest company in the world and you're a shareholder in the greatest company in the world, arguably you don't need to know anything. You don't need to take any risk. The companies that are going to embrace Bitcoin are the ones that aren't Microsoft. When you get to the point where you realize you can't compete against Microsoft, when you're not the digital monopoly, when you're one of the 27,000 retailers that got crushed underfoot by Amazon, right? When you're one of the 47,000 media companies getting beat to death by Google or by Meta, when you look at your stock and it's been stuck in a rut for a decade, right? If you're the CEO or the CFO of that company and you ask yourself honestly, am I going to be able to outperform NVIDIA or outperform Google or outperform Apple? Do I have a monopoly on 1 billion people? Do I or not?
Michael Saylor argued that Bitcoin's volatility is not a flaw but a benefit for both investors and businesses. He believes that those willing to take risks and embrace the potential for rewards should be the ones to profit from Bitcoin. Saylor highlighted that traditional corporate finance often views volatility negatively and treats capital as if it's toxic. He pointed out how companies like Apple, Microsoft, and Nvidia celebrate stock buybacks and dividends, essentially discarding capital as quickly as possible. According to Saylor, this approach stems from the toxic nature of the capital assets these companies are leveraging. He criticized the practice of investing in bonds with negative real yields, which he views as value destruction. In contrast, he suggests that Bitcoin can act as a capital asset, allowing businesses to preserve their money while potentially increasing their earnings over time. Saylor also mentioned that corporations that don't face immediate financial pressure, like Microsoft, might overlook Bitcoin's potential. However, companies that are struggling or aiming to disrupt the status quo may be more inclined to adopt Bitcoin as a strategic asset. Let's dive into more insights from Michael Saylor's interview.
If you have a monopoly, you're getting regulated. If you have a digital monopoly that's unregulated, you can actually outperform until you get regulated. The companies that are embracing Bitcoin are the ones they're the zombie companies where there's like, I'm public, but I'm stuck in a rut. The likelihood that I'm going to start to grow organically 20% every year for the next decade is like less than 1%, right? Once you get to the point where your odds of actually growing organically 20% a year for the next 10 years are less than 1%, then then at least at that point you need to invite or consider a new idea. And I think normally what happens is when a company hits that wall, they decide to sell themselves, right? That's one exit. I just sell the company. I had 100 competitors, Morgan. Every one of them sold themselves over the course of 20 years. Every one. So you sell yourself. If you can't sell yourself, your next idea is LBO. I'm going to take myself private. I'm going to here's the big idea. I have a low growth company growing 5%, but if I can borrow money, cheap capital, and lever up, then I can actually make my low growth company look like a high growth equity. Who does that? Apple's been doing that for 5 years, right? Borrow money, buy the stock back, lever up the equity. So sometimes they go and do an LBO. Third, they work themselves to death until they have a heart attack, in frustration. I mean, like, I think I tried 25 different things to break out of a rut before I discovered Bitcoin. I bought the stock back, I spent money on marketing, I invented 20 products, and it's just like hitting your head against the wall. So sometimes they do that and they just give up and they retire in dejection. And now you've got this fourth idea: adopt digital capital, right? Recapitalize your company, invert your balance sheet, right? That's the new opportunity. I think in the history, Bitcoin's a paradigm shift, and if you study paradigm shifts, Thomas Kuhn, he says people only embrace new paradigms when there's a war, right, or when they die, right? Like science advances one funeral at a time, right? One of the famous quotes. It's like, so in this particular case, who gets crypto? Who gets Bitcoin? The 20-somethings. 20-something person, a 20-something business person, they have no money, they have no hope, they're not going to get ahead the way their father or their grandparents did, right? And so you're a teenager or a 20-something or a 30-something, you're like streaming, YouTube, crypto, something. They have everything to gain, nothing to lose. And then you have people that are caught up in a war, whether it's the COVID war or the lockdown or, guess what? My bank just stole all my money in Lebanon, or a meltdown. Those are the companies that will flip first. The vote, by the way, at Microsoft was 99.5%, against 50 basis points in favor of the proposal was investigate Bitcoin. That was research Bitcoin, and management recommended they wouldn't, and it was 50 basis points voted in favor. And I think it's just demonstrative of the point that, if you've got a great company and happy shareholders, people don't change. But that's okay, right? Because rich, successful people that don't need money don't have any need to reconsider the monetary proposition, right? Bitcoin is money for people that need it. It's not money for people that have too much of it already or already have a way to get it.
Michael Saylor argued that companies without monopolies, or digital monopolies, will eventually be outcompete, while those with unregulated digital monopolies can thrive until regulations catch up. He pointed out that organizations embracing Bitcoin often struggle to grow organically, with less than a 1% chance of achieving 20% annual growth in the next decade. Saylor mentioned that when businesses face a growth decline, they often consider options like selling, going private, or working harder. However, he believes that using digital capital, such as Bitcoin, offers a new way for businesses to recapitalize and restructure their balance sheet. Saylor also highlighted that people in desperate situations or those with fewer financial resources are more likely to adopt innovative ideas like Bitcoin. Younger generations, with fewer financial assets and a sense that they have little to lose, are particularly inclined to use Bitcoin. In contrast, established corporations like Microsoft, with satisfied shareholders, are less likely to shift their financial strategies to incorporate Bitcoin. He emphasized that Bitcoin is particularly beneficial for those who need it the most, rather than those who already have substantial wealth or access to it. Despite Bitcoin's value falling to $91,200 in 2022 and experiencing volatility linked to global economic uncertainties and fears of a trade war, Bitcoin's recovery above $95,000 shows its resilience. A 30-day correlation of 0.76 between Bitcoin and the S&P 500 indicates their interconnectedness. While Bitcoin's volatility increased during this period, analysts like Nick Four of Derived Doxes remain optimistic about Bitcoin's long-term potential, expecting further development in 2025. Do you think established companies will eventually adopt Bitcoin as a strategic asset, or will it remain a niche investment for smaller players? Let us know your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.